This week was quite boring in the market until Thursday when we got the PPI report and it came in better than expected, and then we hit all-time highs. Taking a little step back, we're looking at the SPY weekly candlestick chart here, and we're seeing a doji candle form here as we head up, with very weak volume also as we head up. This shows weakness as we are pushing higher and that we might be getting to an exhaustion point. I'm the Wall Street Yardie, and this is the weekly market report for the week starting August 17th. I'm gonna get you set up, give you a plan so that you know where the market is headed before you take any trades this week. Quick look at the VIX weekly chart. Remember, VIX measures fear, also known as volatility in the market, and is inversely related to the SPY. With VIX at these historic support levels, we could see a bounce on the VIX, which could mean bigger moves down on the SPY. Remember, Warren Buffett tells us to buy fear and sell greed. And right now, the market is showing no fear. In fact, the CNN fear and greed indicator is also showing greed. We haven't hit extreme greed yet, but volumes are so low, we need to be cautious. Stick around and I will share the trade to take advantage of this in a less risky way at the end of this video. This will be a pretty light week for earnings. The big thing to watch this week is the retail earnings. We have Home Depot and Lowe's kicking off things Tuesday and Wednesday. These are the major ones to watch, as they also indicate how the housing with rates holding steady is going to play out in the market. One to watch on Tuesday before the open for some movement is KLAR, as they've been doing more with their buy now pay later platform and expanding that business. As you can see from the daily candlestick chart, KLAR has crossed the anchored VWAP, or volume weighted average price, which shows the strength of buyers. KLAR is a pretty new company, so the regular moving averages here weren't that helpful when I was analyzing this chart. So we'll use the anchored VWAP to see the sentiment from the chart. Another view shows the uptrend yellow line here since the last two quarterly reports. As you can see, price has been heading straight up in a nice steady line, but it shows strength heading into the earnings, and that's what we're going to be watching for here. We then get Walmart, Target, and TJX. These should tell us a story of how well the economy is doing from a Main Street or regular people standpoint. One last one to watch in the AI data center story is John Deere, as they have the equipment that helps build the data centers, so more info on how the data center cycle is shaping up. Ross is also a fun one to watch this week. The Wall Street Bets crowd loves to get involved with this one, so I want to keep an eye on this to see if we get any movement. Maybe I could play some options off of it. All right, so that's what we're looking at this week for earnings. Should be an interesting week given the weak retail numbers that we had on Friday. So let's jump on over to the charts and see what that's telling us. And then I'm gonna show you this trade I took based on the low VIX. All right, here we are on the SPY weekly candlestick chart. I wanted to start on this chart because it's a little bit cleaner than the daily right now, given the action. And we're gonna see that here in a second. But as I pointed out in the intro, we have a little doji candle here, low volume. I'm seeing that maybe we could peak up here to 790, 791, and possibly reverse off of that if there's going to be some upward movement on Monday, maybe Tuesday. I'm expecting Monday and Tuesday to be kind of quiet unless the administration comes out and tells us something about the Strait of Hormuz, manipulates the market a little bit more, and then we get a little bit upward movement right there, right? So that's one thing we're going to watch. So jumping right back down to the daily chart, the reason I squeezed up to the weekly is, if you could see here, we were just kind of sideways all week. There was not really a lot of movement. We got a nice little bump on Thursday. This was due to the PPI, which is the producer price index. This is the inflation gauge for manufacturers. So when they're buying things wholesale, these are the prices that they're paying. They then manufacture their products and they sell it to us, which then comes out on the CPI, which actually happened on Wednesday. But on Thursday, we got a very good PPI number. The number came in lower than expected. The market really loved that. But then what happened on Friday is we had really bad retail sales numbers, and the market didn't like that. So we had a very mixed week. Hence, kind of this sideways movement. Whenever I get that, I like to combine the candles. And one quick way to do that is by going to the weekly chart. So that's why I started us there this week. Now, looking at this daily candlestick chart, we still have our uptrend line here. This was from our couple weeks ago. We had a triangle on. We actually had a trend line going down here, but this one we kept on because it's still very relevant. If we do pull back, we could pull back right to that trend line and bounce. So this trend line can continue to be support going forward for any movement as we pull back into the market here, as I expect we might. We also have this gap we need to fill here, so we're going to pay attention to that. That could be another major area of support. And if we actually draw a little path line here, we can maybe see that if we come down, right, to this level, we're going to probably get very close. And you know, this is going into maybe the next following week, August 24th. But if we come straight down here, we might be able to get down, fill this gap, and also hit this point. So this will be a double support area, which is always interesting to see price bounce off of that. Price bouncing off of a place where support is shown in two different ways. One here with this horizontal line here, right? So this is where the gap would fill. And then it would bounce off of this point. If it bounces anywhere near this point, so this could be Wednesday, Thursday, Friday next week, if it comes straight back down, it's going to be a very strong bounce, right? And we're going to continue on up. The bulls are going to step in and continue to move this thing higher. And we could easily see 800 at that point if that's what takes place. With that all said, I do think we're going to head lower. And part of that reason is, like I showed in the intro, is the VIX. And if we look at the VIX here, we're going to see that the VIX is actually coming down here to lows. So we haven't seen these lows on the VIX since, looks like here, December 2025. So pretty much all year, this is the lowest the VIX has been all year. So whenever we get the VIX this low, getting into the low teens, 14, 13, 12, like we saw back here around Christmas time, that's a good area where we want to start to be very cautious, because as the VIX moves up, the SPY moves down. So we want to be very cautious with the market. So what I did was I decided that we're getting very low on the VIX, and I wanted to take a bearish position just to hedge some things in the portfolio. If we do get a big violent pullback, right, like we were just talking about, straight back down to this support line, I want to be able to take advantage of that. So what I did is I put together a debit put spread, which is putting together two options. One you're going to buy and the other one you're going to sell. And the reason we do that is we want to cover the cost of our put option. Our put options in this case can be a little bit pricey. We're talking about a $700 stock here with the SPY. So we want to make sure that we can, you know, size this appropriately for our accounts. And then be able to deal with it if we lose completely, right? So this is part of the risk management that you need to have as part of your portfolios. So what I decided on was the October expiration 70.75 long put. So I'm going to buy this put 70.75, and then we're going to sell another put here at 7.60. Why did I choose these strikes? So the first reason I chose the 7.75, this is, if you look at the chart, this is kind of the top of where price was kind of bumping up on this ceiling until Thursday when we got the good PPI report. And then we started pulling back towards that on Friday. We didn't quite get down to it yet. So there's a little bit of risk in this trade because price is showing weakness, but it hasn't completely triggered yet. So I don't have a confirmation, so I am a little early. Now, the short side, where I sold the put at 7.60, the reason I chose this is if it does pull back, I'm expecting it to pull back to the area we were just discussing. Here's our trend line. Here's our gap area. So I dropped my short strike right there for 7.60. So that gives us a $15 width. Which means that come October expiration, if price is anywhere below that, both of these options are then in the money. And then the value of the width is going to be 15 bucks. Now, I paid $4.50 for this spread. So this is a potential triple for me. However, I'm not going to wait for that to triple. If price gets all the way down here to my 7.60 level or maybe a little bit below it, I'm going to be looking to sell this spread for somewhere about 7 to 9 bucks. And in fact, right after I put in my trade and my trade gets filled, what I love to do with these spreads is, because I know my target exit, I put in a good to cancel order for 9 bucks. And then I just watch it every day just to make sure price is heading in my direction. Now, if price comes up and starts breaking out above this, I will close this spread out, take my small loss, and move on. Taking a quick look at the QQQs now, we see here that the Qs are still kind of stuck in this triangle area. This trend line here that we have on could form a resistance point for the Qs, especially given everything we're looking at in the VIX and the SPY for a little pullback. This is possibly why SPY hasn't fully broken out yet either. The Mag 7 is about 35% of the SPY, which is all tech. So if the Qs aren't moving up and breaking out, it's going to be really hard for the SPY to break out as well. So we're going to continue to watch this one. I probably won't take any action on this because we're still kind of inside of this big range. I'm just going to continue to watch it. If we start to break out above 750 up here, then I start getting interested in QQQ. If we break down below this 707 or maybe below this gap area, then I'm going to be interested to the downside and I'll be looking at puts in that situation.